As you might have seen on the internet or on social media, the UAE just introduced a new tax change that has everyone up in arms. This new rule technically no longer makes Dubai zero now that they've introduced a 9% corporate tax on businesses which make over $100,000 in profits per year. While some experts are saying that this is the end of Dubai, I think these claims are too extreme as the UAE still has the most attractive tax regime globally. So in today's video, we'll be taking an honest look at Dubai and covering both the benefits and drawbacks. After watching this video, you'll have a clearer perspective on the matter from a tax attorney. Before we dive into the broader subject, let's address the 9% change that everyone's been talking about. So who's actually going to be affected by this new policy? All businesses incorporated in the UAE are now required to register and file their annual corporate tax returns. However, there are some entities that are exempted from the recently corporate tax automatically or upon meeting certain criteria established by the country's tax authority, which are as follows: government entities, government-controlled entities, extractive and non-extractive businesses, qualifying public benefit entities, qualifying investment funds, and public, private and social security funds. But keep in mind that personal income, dividend, withholding tax and capital gain taxes will still remain at 0%, which is the key advantage of being a UAE resident and doing business in the country. So let's understand how this new change would affect a business making $1 million in profit per year before and after a 9% corporate tax rate. As you can see from this table, which is based on a hypothetical scenario for UAE registered businesses, before the implementation of corporate tax, a company that earns $1 million in annual revenue is able to generate an annual net profit of $800,000 after deducting all annual expenses. After the implementation of corporate tax, the same company is now generating an annual net profit of $728,000 on the same revenue after deducting all annual expenses and a 9% corporate tax bill of $72,000. While there are other countries such as the popular offshore jurisdictions such as the Cayman Islands and Jersey, which offers 0% corporate tax, the challenge arises when you're actually running your trading or operations from there, as this wouldn't be feasible in the long run, especially once you start scaling. For example, we've heard from clients becoming frustrated when it comes to local banking, which can be very slow in these places. I'm not trying to say that these offshore locations are outdated or unattractive if you set up there, as they are still regarded as solid destinations for protecting your assets and legacy planning. However, when it comes to actually operating your business, global financial hubs such as Dubai come out on top due to their business-friendly regulations, world-class infrastructure and connectivity with other markets. Talking about financial hubs, Hong Kong, whilst it has a corporate tax rate of 16.5%, you can make an offshore status claim, which in a nutshell means that you can obtain a 0% corporate tax rate if A, your company is registered in Hong Kong but you have no physical presence, and B, you actually conduct no business in Hong Kong and do not sell to any Hong Kong businesses or individuals, and with all profits generated from outside of the country. Although this sounds very attractive, this does come with some scrutiny from the Hong Kong tax authorities, as you'll have to build a strong case to obtain that exemption. You will also have to apply for an exemption each year, and it's not 100% guaranteed. Although we have seen some individuals obtain such exemptions, and it really depends on a case-to-case basis. A potential downside with having the option in Hong Kong is trying to find a local bank which will open an account for you. Good luck with that, as it could prove to be very difficult to open a bank account locally if you're an offshore entity with no physical presence or residency. I personally think that it's easier to simply set up your business in a place where there is a fixed corporate tax rate, whether that's 0% or 9% as with the UAE now, rather than going through the troubles of having to apply for tax exemptions and refunds, especially when you're starting up and trying to build your business in a new market. Dubai and the UAE by far still has the upper hand when comparing globally, despite having a newly introduced 9% corporate tax rate, as you can experience a high quality of life once you become a resident, enjoy zero tax on your personal income and dividend. And if you think about how this new 9% corporate tax compares to countries in Europe and the West, it is still far less than them. In the United States, federal corporate income tax is 21%. In the UK, there is a corporate tax rate of 25%, and Australia has a corporate tax rate starting at 25% if you're a small business. And take Canada, where corporate tax is at 38%. And again, in all these countries I just mentioned, you're also going to get hit with other taxes outside of corporate tax. So Dubai definitely has the advantage here. There's also many other indirect benefits that come with living in Dubai that don't involve taxes. It is ranked as one of the safest countries in the world due to Dubai's stringent law enforcement and low tolerance for crime. There are stories of tourists and residents losing their wallets or luxury items in public areas and which are later returned to them without having been displaced or even stolen. Compare this to any other international city and it is very rare that you would get such items back instantly. If we look at what's been happening in London in recent years, you simply can't wear a luxury watch without the fear of being attacked. According to Global Crime Prevention Database, the Watch Register, there have been almost 50,000 watches reported as stolen in the UK since 2019 and around 13% of which involve some sort of violence. Along with safety, Dubai offers a significantly higher quality of life that you wouldn't experience in the West today. The city has world-class infrastructure, endless choices when it comes to retail and dining, and it's known for its cleanliness thanks to its strict laws against littering. In terms of my personal opinion about Dubai, I admit I'm a little biased, but that's because I've experienced living across major cities globally, from London through to Bangkok, which although they are great cities with a lot of rich history and culture, they don't tick every box for me if we compare safety, convenience, cleanliness and various other factors. There are certain opinions out there that living in Dubai can become lonely at times and there's a lack of community given its transient nature. But for an entrepreneur escaping high taxes and a deteriorating quality of life in the West, this all becomes irrelevant because the UAE continues to attract many wealthy business people and it's very easy to run into these people frequently. Dubai offers endless opportunities to grow your network and meet like-minded people. You can literally connect with someone online such as LinkedIn, for example, drop them a message to meet and discuss a business idea or proposition. Try doing this in the UK or the US and you're not going to get someone pinging you back after that initial reach out. That's because these places are highly institutionalized. Cost of living is also still reasonable compared to major US cities such as New York or Miami, where a one-bedroom apartment will set you back up to $4,000 a month or more in a prime area, which is significantly higher than living in central Dubai. So hopefully after watching this, you have some additional perspective on Dubai and a better understanding of the recent tax change. If you've enjoyed this video, please subscribe to the channel, and if you'd like help in obtaining a second residency abroad such as in Dubai, you can book a call with me or check out my website in the description below. Thanks for watching.